Good afternoon, everybody. You must be quite sick of seeing me now, session after session. But then, as you know, the tough sessions, especially post lunch, they have to be carried on. But I have a fantastic speaker with me who's extremely experienced in not only insurance, general insurance, life insurance, broking, and before that, banking. So, who better than to share the nuances of distribution, and we'll probably focus our discussion on that. There is only one trick to keep people awake after lunch, and it doesn't depend on us. It is to make the AC very cold, and then people can't sleep. So I think as there are much lesser people, I'm sure you're already feeling the cold, and thankfully you can't nod off. Okay, so as we talk about distribution, I'd like to talk about the theme first, Veda. We go back a long way, so I know what all he has done and how much he has done, how much he's achieved. So therefore, I'd like his thoughts and considered thoughts, Veda, yours on the theme, which is penetration. Do you think it's right to really measure penetration as premium by divided by GDP or some other measure, and therefore, what brings along with it? What are your thoughts on this?
First, good afternoon, and thank you for having me on the panel, Joydeep. Joydeep, by the way, was also responsible for me to come into insurance. So that, as a starting measure, you have disclosures on this table as well. Joydeep, if I think the theme on expanding insurance penetration can be looked at in multiple perspectives. And one of the perspectives is we have an opportunity as an industry to expand the number of customers, and therefore premium to GDP as a number can obviously change depending on obviously the case size which comes in per insurance customer. The other way to look at it is for the existing customers today, is there an adequate protection gap across all the risks which they currently see and which they are likely to see in the near future. And let me just give you a sense of where we are coming from. As part of the Mahindra Group and Mahindra Insurance Brokers, we bring in close to about anywhere between 1.5 lakhs to 2 lakh customers a month, roughly 2 million customer additions plus every year, new customer additions. And we have this exceptional pipe of customers who have come in. But many of these customers still, even today, wouldn't have access to, let's say, for example, product constructs like a retail crop product on the tractor side, a cyber product, or a product which is on home and contents, which is really not something which is very popular. And the reason for this is, as a distributor, the distribution economics to sell a standalone product of small ticket sizes is very difficult. It doesn't make commercial sense. So the one way of looking at penetration is, for the same customer base, can you expand the number of products and therefore the number of protection gap elements through a single pipe in a sequence with consent. And I think that is another route to take. So if you just multiply 2 million customers, hopefully even 50% of them taking 3 different products at the same time, you have a large penetration gap which can get filled. And it also takes care of risks which otherwise would not get insured. So therefore, there are, I think, different perspectives of looking at the penetration space. Do it as a product construct and a gap construct rather than just looking at going deeper into more markets and more customers. And may I add, I think, and I'll just take another minute here, the link between the dealer channel or the MISP channel within the entire ecosystem sometimes is a much maligned one. But the fact remains that this whole channel has built phenomenal infrastructure, both in terms of acquiring customers and servicing customers. So you have an exceptional large number of touch points, well versed in insurance, with a platform model in place and an ability to talk to customers for multiple elements. And I think going forward, we need to leverage that, especially with IRDA's regulatory framework, which now allows for product innovation as well.
It's interesting that you talk of the pipe, and it brings a different analogy. It is like long back, VSNL launched a tri-band telephone line. Long way, I'm talking of 25 years back. And the promise was through your telephone line, you will have internet and you'll have some more on-demand services, on-demand satellite TV. So again, the same concept that you do the plumbing once.
Correct.
And then you keep subscribing. Cost of delivery comes down, but most importantly for insurance and retail insurance, confusion comes down. If simplicity can be achieved and simplification can be achieved. In this regard, how I'll first take this question will have two parts. How far do you think the companies have progressed? Because you deal with everybody, all the insurers. How far have they progressed in simplifying products now that product innovation is possible and the biggest innovation is probably simplification? And how far do you think the role of brokers have been justified? Because many other countries in the world, brokers play a fantastic role in that. And I would sort of lay it on the table that probably India, the broking channel has not really played a role. What is your opinion on these two things?
I think first on working with the insurers, we work with 40 plus insurers across life, non-life space. I do want to call out and recognize that many of the insurers, especially immediately after the regulations, have put in substantial efforts to try and customize and first simplify and then customize product offerings which they can put in through the plumbing, so as to speak. We've started already testing pilots here. We have 3 different insurers where we have tested pilots, and we have a sequence of them happening over the next few months. So I must say the response from the insurer side has been very encouraging, and I would say for 2 reasons. One, the underwriting teams are taking a longer term view on how this will play out based on experience, and the claims teams are also getting ready because there is a very different approach to claims as well. So both sides we are seeing a lot of work, and 2-3 insurers have taken the lead here and the rest are following. So that's one part of the question. So very good to see insurer interest and collaborative working with the brokers. The second is the broker community perhaps has gone through, and all of us have gone through a period of evolution. We are a 20-year-old broker now. When we started, this was a fragmented environment, few brokers, very individual skill sets, geographies and product segments to play in. But now you've seen people build scale, and there is a lot of work which brokers have done in advocating the real reason for their existence, which is representing the customer. So whether it is online brokers or online plus offline brokers, there is a lot of scale and size which has come in. Why this matters is if you don't have scale and size, the ability to invest in building deep distribution and tech capability is something which is not possible. And you have at least the top 10 brokers today generating either sufficient surpluses or a route to profitability, which allows us to make those long-term investments. And we believe that the opportunity for us as brokers to serve more customers is only expanding, and therefore, contrary to a lot of let's say views that this community will slip off, I think it will only expand and take up more business and more customer service issues going forward.
You speak of 10 brokers reaching there and doing it. Is it sufficient? Is it even remotely sufficient? Because a little while back, Tapan Singhal was on the stage and he was talking about answering a question of how many insurance companies India needs. US has 5,900. India probably needs at least 1,000 to start with. So what do you think is the right number?
Yeah, I think I don't look at it as only 10. I think the models today are changing to say, can a broker work with another broker providing certain support services in markets? If you look at some of the brokers outside in the US, many of them have built a structure where one broker provides platform plus specialist advisory services, and a consuming broker, so as to speak, in a market with a particular client leverages on these specialist services which are available. So the extended arm of brokers is something which we have to look at. It is not sufficient for only 10. You would need perhaps the next 100 coming up. But the opportunity is not just 10 of them or 100 of them expanding, but how much more each of them collaborates for specific skill sets and customer segments. There are customers in some parts of India which I may not be able to reach, but some other broker may be able to reach. But can I make the difference by providing a tech platform at a lower cost, or can I provide claim services because I have aggregate scale available? Those are things which are important, and therefore the partnership model in broking is something which we are looking at in terms of next stage of evolution. It is happening in many markets, and we're also looking at how we can do that without necessarily taking up equity, so as to speak.
And somewhere there's a question of nomenclature. In the Indian market, see, agent has not had a great social standing, unfortunately, whereas in some other markets, it's a fantastic profession. People actually prepare themselves to be an agent because they know that it will lead to flexible working hours and almost unlimited wealth. There are agents in Middle East, in US, who have net worth of $20 million, $25 million, but that's something which has not happened because of the nomenclature. The Indian private sector insurance industry has dealt with it by changing the name of the agent to an advisor to sort of give it a different connotation. Do you think broker also suffers from that in India? The name broker, because from stockbroker to house broker to everywhere, there is that certain connotation of mistrust. So do you think that that's something which also comes in the way? Or
it
retail?
is, to an extent, yes. In an India-specific environment, a broker is that dalal in between who just does the transaction services.
The middleman,
person, so as to speak. The English word or the Hindi word could be different, but the fact remains that it is a difficult one. But if I think we've had conversations both at the regulatory level and otherwise. Let's see how it evolves. But I think the priority for us is forget the name first. Are you able to communicate the brand in terms of trust which it can generate? Second, can you give quality advice by the kind of people whom you have on the ground, by the ability to train and not missell? And then wait for a change which comes in the nomenclature later on. The fact remains, Joydeep, that I'm more worried about the missell component rather than the name, because misselling is bigger danger, and that is really what spoils the entire name here. Brokers outside are known for being the specialists in whichever area they work in. Here it is a transaction intermediary. I think we need to move away to quality advice. I think that's the journey.
More of advice and
more of advice,
counseling, planning.
Absolutely.
So how do you think, what is the role of technology for really making it, bringing up the standard, bringing a surety and assurance and compliance, as well as maybe some better ability to get through to the customer when they don't really want to talk about insurance?
Yeah. I think tech for us, and I'll maybe talk about our experience and the way we are looking at it. Tech is basically a driver for scale, because you have once you have built a tech platform which is flexible, which allows you to communicate with the entire ecosystem providers on real time. You have the ability to push a lot of product offerings which is available for the customer in terms of choice. So therefore, tech provides choice at scale. That's the first piece which is critical for us. The second is, the way we are conducting a few experiments. I know I was not there in the morning session, but I heard that you were talking about training. How do you train at scale through tech? You can have someone who doesn't know everything about the product across all the insurers, but if you're able to provide advice based on the first set of interactions coming in with the customer, then you have a training model which is top class. And I think we have a clear use case for training, which we are testing out with some of our AI partners as well. This third area is on even on contact center and call center related areas. How do you, even for example, if you have to reach out to a particular base and fix appointments for doing a face-to-face advice, can you do it better through a tech solution, AI-led humanoid tech solution, than what we are doing today? I think those are simple starting points for us to use tech. with the understanding that your fundamental tech platforms are scalable as it is today for us. We can accommodate 2 million plus another 2 million very quickly. And I think that's something which we can, which is important.
Fantastic. So, for those who do not know, he's also a very big cricket enthusiast. And if he shaves off his beard and puts on a wig, maybe can pass off as the gentleman who was just retired yesterday.
Unfortunately.
So, so Veda, fantastic, wonderful having you here. I think people have got an insight into how the broking market works. It doesn't happen in many conferences. So thank you to the ETH people to have included this particular session. So with that, I'd like to hand over the mic right on time this time.
Thank you, Mike.
Thank you.
Thank you very much. Thank you.